Right now, while you're listening to this, 3 major banks just lost another 1,000 customers to Fintech competitors. Not tomorrow. Not next quarter. Today. And the devastating part? These weren't random departures. These were strategic defections to platforms that offer something traditional banks are still struggling to understand. The market domination strategy reshaping finance isn't coming. It's already here. And most institutions are watching it happen without realizing they're the target. I'm calling this episode the market domination strategy that's destroying traditional banks, and you don't see it. Because after 15 years consulting with financial institutions across the country, I have witnessed a pattern that's both predictable and preventable. The gap between traditional banking systems and digital-first competitors isn't just widening. It's becoming a chasm that's swallowing market share, customer loyalty, and competitive advantage at an unprecedented rate. Here's what's actually happening in the market right now. Victoria Sterling, our AI business strategist, was reviewing real-time analytics last week and pointed out something that should concern every banking executive listening to this. The data shows that digital native financial services are capturing customers not through better rates or flashier marketing, but through something much more fundamental. They're redefining what customers expect from financial interactions entirely. The problem isn't that traditional banks don't understand technology. The problem is that most institutions are still thinking about digital transformation as an upgrade to their existing processes, when what's actually required is a complete reimagining of how financial services operate in a connected economy. I was speaking with Robert Harrison, a banking executive we work with regularly, and he made a point that perfectly captures this challenge. He said, "We keep trying to digitize our legacy processes instead of asking whether those processes should exist at all." That's the identity disruption happening right now. Banks are optimizing for a world that no longer exists. Here's the insider knowledge most institutions are missing. The fintech companies that are dominating market share aren't just building better apps or faster payment systems. They're leveraging 3 interconnected technologies that traditional banks have been implementing in isolation: artificial intelligence, blockchain infrastructure, and real-time payment networks. But here's the critical insight. It's not about the individual technologies. It's about how these technologies create compound advantages when integrated properly. The institutions we work with that have successfully defended and grown their market position all recognized one fundamental truth. Their core banking infrastructure wasn't just outdated, it was actively preventing them from competing in modern financial markets. This is where the real transformation begins. Let me share some data that illustrates exactly what we're dealing with. When we analyze the technology stack of a typical community bank or regional institution, we usually find systems that were designed for batch processing in a world that now demands real-time everything. The big 3 core banking providers, Fiserv, Jack Henry, and FIS, serve approximately 70% of U.S. banks. And while these platforms have evolved significantly, many institutions are still running legacy configurations that limit their competitive capabilities. But here's where it gets interesting. The banks that are thriving in this environment aren't necessarily the ones with the biggest technology budgets. They're the ones that understand how to orchestrate their existing infrastructure with modern capabilities. We recently helped an institution modernize their lending operations by integrating Abrigo's loan origination system with their existing core platform. The transformation was remarkable. Loan processing times dropped by 60%, and their ability to compete for quality borrowers improved dramatically. Abrigo's platform doesn't just streamline workflows. It enables institutions to make faster, more intelligent lending decisions while maintaining the risk management standards that regulators expect. The blockchain integration story is equally compelling. We worked with a bank that was skeptical about distributed ledger technology until they realized it could solve their correspondent banking challenges. By implementing blockchain-based settlement rails, they reduced transaction costs by 40% and eliminated the multi-day clearing cycles that were driving commercial customers to fintech alternatives. But the real game changer is artificial intelligence, and this is where most institutions are dramatically underestimating the competitive threat. The fintech companies dominating market share aren't using AI for chatbots and basic automation. They are using machine learning algorithms to predict customer behavior, optimize pricing in real time, and identify opportunities that traditional analytical methods completely miss. I'll give you a specific example without naming the institution. We recently implemented an AI-driven customer intelligence platform for a regional bank that was losing deposits to online competitors. Within 6 months, they identified over $15 million in additional lending opportunities within their existing customer base, opportunities their traditional systems had never surfaced. That's not incremental improvement. That's competitive advantage. The payment infrastructure transformation is equally critical. Real-time payment capabilities aren't just about speed anymore. They're about creating the foundation for embedded finance, API-driven services, and the kind of seamless customer experiences that digital natives expect. The banks that understand this are building payment infrastructures that can support not just current customer needs, but business models that don't exist yet. So what does implementation actually look like? First, you need to audit your technology architecture with one specific question in mind. Does this system enable or prevent real-time customer engagement? If the answer is prevent, that system becomes your highest priority for modernization. At Advanedge, we help institutions navigate this transformation through 3 critical areas. Digital payment modernization that integrates with existing core systems while enabling future capabilities. System integration strategies that connect legacy platforms with modern APIs and real-time processing capabilities. And regulatory navigation that ensures every technology's decision maintains compliance while maximizing competitive advantage. The regulatory piece is crucial because many institutions avoid necessary technology upgrades due to compliance concerns. But here's what we've learned after working with hundreds of financial institutions. The regulatory risk of maintaining outdated systems is actually higher than the risk of thoughtful modernization. Regulators expect banks to manage operational risk, and legacy systems that can't support modern security protocols or real-time monitoring represent significant operational vulnerabilities. The integration challenge is where most institutions need the most support. It's not enough to implement new technologies in isolation. The banks that are successfully competing with fintech alternatives have created technology ecosystems where AI insights inform lending decisions, blockchain infrastructure enables efficient settlements, and real-time payment capabilities support embedded finance opportunities. Here's the reality that every banking executive needs to understand. The future of financial services belongs to institutions that can adapt their operational capabilities to meet customer expectations that are being shaped by companies outside the traditional banking industry. Amazon's one-click ordering didn't just change e-commerce. It changed what customers expect from every digital interaction, including banking. The institutions that will dominate the next decade of financial services aren't necessarily the biggest or the ones with the most resources. They're the ones that understand how to leverage technology to create competitive advantages that compound over time. They're building platforms, not just improving processes. The businesses that survive the next 3 years all did one thing. Next video reveals it.